Good morning, everyone, and welcome to the European crossover webinar. And obviously today it's ECB day. A little bit unusual because, like I said, it's on a Wednesday. They wanted to make it to I think it's the IMF meeting. That's why they're having it a little bit earlier. I'm not used to having a ECB day on a Wednesday. Seems a bit odd, but anyway, let's take a look where we're at right now. Now, from the previous day, we were looking from Asia, not from Asia last night, but the Asia prior before. I'd been commenting that I was looking for a dip in the S&Ps, and keep your eyes on the yen pairs. And sure enough, we saw a pretty good fall. We had our support at 1108 in the dollar yen. We did make that trek down there. We actually kind of bounced a little bit off there, and then we got below, just got a little bit low, actually tested right at 111. We came back up. We had a 1291 where, we haven't not been able to add on to these gains if we were going to make a move yet in the year, and we'll get to that. Dollar CAD, boy, we saw a nice rebound here in this dollar CAD. We did break the 133. I thought we might dip into the 70s, maybe even a scare to 63. The crude oil started dip and that pulled it down. Now crude oil's trying to stabilize itself, but we still eased back, but we still made a pretty good run back up in here. Matter of fact, speaking of the S&Ps, yeah, there was that dip that we saw. I was kind of keeping a track of the time, and we also saw a move here in the speaking of which, the Aussie yen, and the Aussie yen did pull back a decent amount. We popped right back up. Boy, pretty good move too. We got as low as just a little bit under 79. Let me see. We had our Aussie yen support at 79.07, and let's take a look here. And our low on the move was 79 even. Well, not bad, not bad, not bad, not bad. But boy, look how quickly we've smartly rebounded here on the Aussie yen. Well, a lot of it has to do with we're still, we're pushing up against these highs in the Australian dollar. And we had mentioned here and posted that several times on the euro yen and this 25.60, and we saw this market go on and try to make a little pop back up again. Ended up holding up very well, and then this dip. Had this marked up before with this. Basically, when I go with the pink line, I'm just indicating that that's the support level or resistance level immediate for that session. Let's go back. Then speaking of which, also we saw a move down into the dollar peso. Remember, I was looking for that move down into the 1890, and certainly we got that move down. We're actually dipping lower. This is a pretty good area. I like it here. Just get this little zone here, but here's that little extra. I was wondering if we could make it down here, this 1885. We're still pushing a little bit lower here. Interesting. But we come into the 78%. We'll see what happens here. Excuse me. And let's go on and cover the news. I'm going to quickly get moving so we can spend more time on the analysis. The last couple of days, we found ourselves right up against the clock. British PM Theresa May goes to Brussels today to seek permission from the EU to delay Brexit. But the postponement it offers may be much longer than what she wants. May wants a June 30th delay, tight enough to keep the pressure on cross-party talks to produce some kind of compromise. But given widespread skepticism in Brussels of her ability to find that consensus, the preference among many is to make it much longer, possibly based on the one-year flextension idea of the EU President Donald Tusk. That means she won't have to keep going back to Brussels every 2 weeks for a fresh extension. Boy, this thing is dragging out even more than I thought. But it also raises the prospect of Britain contesting the European Parliament elections as a proxy battle over Brexit, not to mention the possibility of a second referendum, Tory leadership machinations, and a snap election further down the line. Barring surprises, the ECB will maintain a broadly dovish stance at its policy meeting today, keeping the policy on hold and evaluating market calls to ease even further. That gets with this message out of the IMF's latest World Economic Report overnight, which concluded that the global economy is slowing, more than expecting that a sharp downturn would require world leaders to coordinate stimulus measures. Among the culprits is the U.S.-China trade war and a potentially disorderly Brexit. World markets have stepped back at last after one of the longest winning streaks in over a year. The IMF's sharp downgrade of this year's global growth forecast on Tuesday, and Washington's ratcheting up of its tariff row with Europe even before resolving its trade war with China were shots across the bow of the buoyant equities. With Wall Street in the red overnight, Asian main bourses mixed today. The all-country index ticked over the lower over the second day. Wednesday, the ECB's meeting, the EU summit on Brexit, the release of the Fed's latest policy minutes, and March's U.S. consumer price inflation data were all reasons for caution. The ECB is widely expected to underline its recent dovish turn, given the continued weakness of Europe's industrial economy this year, and markets will watch closely for details of any plans it may tier its sub-zero deposit rates to aid banks during a long period of extraordinarily low interest rates. Hopes of a China-led turn in the regional economy last month, however, were encouraged by the news on Wednesday of an unexpected 0.4 jump in French industrial output in Europe. European stock futures were down before the open. Sterling nudged higher, with the EU now is widely expected to offer the UK a long extension of up to a year in its Brexit date. Elsewhere, eyes were on the Turkey, where economy minister Albayrak is expected to outline his latest economic plan. And as I said, we go into this, we do have, let's see, UK manufacturing outputs, construction. Let's see, ECB decision, March CPI data. Let's see, FOMC minutes on tap. This is just, look how short the little news was. I just thought I'd touch this anyway, since this was the only news we had regarding FX. Norwegian crown rallied to its highest level against the euro in 5 months on Wednesday after stronger than expected inflation raised expectations of another rate hike for the central bank in the coming months. Core CPI came in at 2.7% compared to market expectations of 2.5%. The crown, which is already one of the best performers against the dollar and the euro so far this year, gained by nearly 0.5% against the euro. Versus the euro, the crown gained to 9.585 crowns per euro, its highest level since mid-November 2018. Positive developments as well as the price pressure is making the rates necessary, Commerzbank strategist said in a daily note. The ECB is all but certain to keep its policy on hold, taking its time to evaluate whether the most recent stimulus is enough to arrest a rapid decline in sentiment. And here's a story just on the ECB, and once again, we usually only have two stories, but because it's something, if it's something pressing, sure enough, it's ECB. Just a general overview, kind of give us an idea of where we stand. In placeholder meeting, the ECB hopes to instill confidence. The European Central Bank is all but certain to keep policy on hold on Wednesday, taking its time to evaluate whether its recent stimulus cocktail is enough to arrest a rapid decline in sentiment. With economic powerhouse Germany skirting a recession, the ECB has already been forced to backtrack on plans to tighten policy and now faces calls to do more, even though the root cause of the downturn, weak demand from abroad, is largely beyond its policy reach. Meeting earlier than usual so they can attend the IMF's spring meeting in Washington, D.C. this week. ECB policymakers were also expected to discuss whether negative rates are still doing more good than harm. But they're likely to stick to a long-standing line that ultra-easy policy is working as intended and that banks remain benefactors of record low rates, so there's no acute need to compensate them for the hefty fee they pay to park their excess cash at the ECB. The latter debate, simmering in 2016, is likely to intensify on Wednesday. However, as growth slows down, suggests the ECB's negative 0.4% deposit rate could stay in the negative. Draghi has also said the Eurozone's bank must consider whether it needs to mitigate the side effects of negative rates. One option under study is a tiered deposit rate, which would shield lenders for part of the cost in a similar vein to move by central banks in Switzerland and Japan. Among the ECB rolled out tiering in March 2016, the situation has since changed, and it could be implemented eventually if policy rates were to remain negative. Also, personal changes to the ECB delaying the discussion about tiering on whether to push out a rate hike even further. Economist Peter Pratt leaving in May, Draghi in October. Policymakers are reluctant to decide on a fundamental revamp of monetary policy before new leaders take charge in the 19-country Eurozone's most powerful institution. Draghi's successor will not even be named until after the European elections in late May. Fresh survey of lending also urged the urgency for any mitigating measures as lenders as expected business credit to grow and lending standards to ease this quarter. Negative interest rates are bad for bank profits, but they're also encouraging banks to make loans. So let's see where we stand as far as rates. Not rates, I meant to say analysis. Well, let's start with the euro. Well, looking at here in the daily, we had the 1291. Obviously, we get a little bit of volatility today. You know, we would have thought that the euro been able to go and push much higher. 1291, we're going to go and keep that as key. Obviously, if the euro were to bounce and get ahead of steam, we could goose some stops. We even have 1311 here on a little bit of a stretch up in here. If we were to try and make a run up here, this would be key 1324. If, let's say, you know, and I don't see where would be the catalyst to push them higher, other than we have stops just above, and we can see how far that would push this market up in here. If we were, that would take us to right there, 1325. 1291 is, we see that in the daily, but just so we know where we're going, if we were to get some kind of a pop, it would be, we'll go right there. Be 1329. So to, let's go right here. I don't expect the euro to take off, but I'm just saying we don't want to be caught with our pants down. We want to know where these levels are at. So if we were to really goose something, Draghi offered some surprise, or maybe, I'll tell you what, another way we could end up taking off a little bit would be if he wasn't as dovish as most people expect him to be. I expect him to, you know, I don't see how he's not going to be able to not, you know, the whole situation with Germany, and they're the ones leading the march lower, really is going to put that pressure. But let's say that he's not as dovish, and so the market's bumping up, and we hit those stops. Well, we know 1291 is a key on the daily, but my thoughts were, and I thought yesterday, hey, if they really push higher, I mean, I was going to put my at around 87. Then I was looking at 93, and I go, it could, if it wanted to, it could push up to about 1304. Well, that's what they would do, is if possibly it doesn't come in as dovish and they try and push some stops, yeah, they could go higher. And how far would they run up? Well, I think we could potentially go up here to 1329. If we did, I think the market would slide right back down. But the key would be 1329 here on the upside, and then on the daily would be 1291 closing basis. I think that you could see the market run up and then probably end up sliding right back down. But I think that's where you would start to see the stops, run out of gas there. Support is going to be 1215, and then 1188. Now remember, our downside target's been that 1149, but if this euro starts to slide, it's going to be pretty bad news. So we're going to go like this. There you go. So there'd be two areas. So if the euro were to start to slide, where would you look? Well, if you were short, you'd say, well, I'm gonna cover some at 1215, and then if they go after it again, they're gonna go hit those stops, and where would they find some additional support? 1188. Our target still remains 1149, but once again is if you're looking for where, same thing on the upside. If we don't see the market, respond to the downside, they're going to try and push the stops. So we'd be looking at 1291. 1329 is our key. The reason it looks like we have it in reverse is because I have this marked off as the daily, and that's why whenever I put an asterisk, that's the daily close resistance. But this is where they could push up. There'll be some resistance right there, 1291. Just to avoid any confusion, I'm going to go on and change this around. There. Let's go into the cable. Boy, this whole Brexit thing is something else. No change for me. No change at all. I don't see any changes. The 28, not 2980, that's a pivot, remember, and 3095. And we're just kind of, and you can see here the high yesterday was it 3121? They're keeping that 3095. No changes here. Who knows what's going to happen in that whole thing? That's just nutty as all get out. Let's take a look at the Aussie. Oh, we're still trying to push higher. And we have 7166. No changes here either. No changes here in the Aussie. 7166. And 7090. No changes. Let's go into the Kiwi. Boy, this Kiwi is really having a tough old time. Well, no changes here in the Kiwi. Also 66.95, and the real resistance comes in at 68 cents. And boy, this poor thing can't lift itself up off the ground. It's really in sad shape. No changes, so that makes it rather easier there. Let's go and move on to the, we missed this one yesterday. This is one that I added because I dropped off the Swissy. Let's go and move into the New Zealand yen. Staying relatively quiet too. Well, we had 75.36. I'm gonna still stick around with that 75.36. Comes in right there. And for support, really no changes. We had it all the way down here for 74.40. And we'll stick with that. Let's go move into the dollar CAD. Well, we did get that break below 33 that we're looking for. I thought we might even push lower. I think we even had our bias chart at 32.63, I thought, and I thought we'd be into the 70s. As the crude started to pare back a bit, that dollar CAD really caught some bit, especially also as equity started to ease back. So it quickly rebounded here. We did have here at 32.63, 33.54. Quick little rebound. I thought we would dip down to about into the 70s and potentially even down here at 32.63, but it just, like I said, this thing came back with a vengeance. We got down to 32.82, so we did break that 33. But with the fall in, as equity started to slide back, we quickly came back rather fast. And I don't see any changes here. It's still going to be 33.54. Now on the downside, that's a little bit different story. Let's go and take a look. Support's going to be right there, 32.97. Really, I mean, even if you dip down here eventually to that 32.93, really they're going to want to buy these dips down here because it's so resilient. So 32.98, you can basically look at that as your risk level, 32.98. Unless crude turns around and takes off again. Call 97 here. Let's go into the dollar peso. Well, we did get that dip we were looking for. And we've come down here to 78%. I liked this zone here. We saw a nice little bounce over there. Not a great bounce, but we're starting to pair back again here. But this is the stand for the Alamo here. We got to hold this 1885.7 here. So we're going to go and put that as our support only so that you know what your risk level is. If you're stepping in here, we know we need to go in and defend this here. So it's 1885.7. There's resistance 1897.9. This market's got to get some momentum. Well, let's move into the dollar yen. Well, we were looking for that dip, and we got that. We got that dip, and we actually had a resistance. I think it was 1148. It only made up. I think what is it made up into the 30s or so. But we came down to 1108. We actually even tested the 111 area here. So on the upside, once again, we talked about this yesterday. You want to go and sell rallies on this thing until proven wrong. So it's going to be 1136 for resistance. Support's going to come in right there at 1181. I mean, I apologize, 1081 initially, 1081. We're right to that 38%. 76 would be the 50%, which would be confluence with that 81. Well, the dollar index is holding its own. We had the 96.81. We know that that's a very key daily level here, daily support, closing support level. We allowed for this to tick down to 96.74. Obviously, if we got a surprise out of the ECB, I really don't see that developing. But how far can we push down? It'd be a pretty good little surprise if it did. Be 96.61 if, and maybe that would coincide with that 13.29. 96.61, let's see what we see on the 2 hour. Yeah, right there. We'll say 96.62 if we really could goose him. On the upside, right there. 97.31 initially. Doesn't mean we can't take off. And once again, if the see what the S&Ps do. But that'd be your first pause area. I mean, where they'd go to and you'd see a little bit of a pause. We've made it up here to this 1304. Remember at the beginning of the week, we were looking for the market could get to 1309. We could hit some stops, but we would see a pause at 1309. We'll see how this plays out. Obviously, if the euro were to take off, we'd goose them some more. But we're going to stick to what our level was for the week. Until then, it's going to be 1309. And let's see, we have a resistance here. Yeah, 1308 here. I think we're looking for a move up to 1309, so move it up that $1. I think that's what we had at the beginning of the week, where the market would take a pause. We said we could hit those stops, but it would then take a pause at 1309. Support. Right there at 1296. And with that, we can go and move into the cross rates. The only thing I see, what I see here with the euro, I'm not saying the only thing I see, what I'm looking at here is that a lot of people expecting Draghi to be dovish. I'm expecting the same thing, but here's the deal. It may be so priced in, and I don't think it's going to be a disappoint. But what I'm thinking is the market may try, unless he's dramatically dovish, the market might try and press and goose the stops up here. If we'd made it up to 1291 or 1304, that'd have been different. But we're so close here that there's got to be stops building here. So they may try and push those, and if they do, it's just going to feed on itself. That's what may happen. But then the euro may ultimately end up coming lower afterwards. But we could push up, I think, potentially to 1329 if that's the case. If they get the run, where it could potentially go to. I think, like I said before, I like because we're doing real well on time. That's what just going to give a little bit of time here. We talked before about this 1260, okay? And I thought we were going to make it up to 1291 without too much trouble. And then we probably, or around there and then pull back. We didn't. I mean, it kept the market in check very well. So my thought process being is there probably is a bevy of stops. And so they may just try and get up there and attack those stops. And they'll feed on themselves until we come up here towards 1329. Potentially up in here. Just kiss that one area, go just take out the stops right there. And then we end up sliding back. And then 1291 would be key on a daily close. If that's it. Now, my guess, I wouldn't be surprised if we did, we might end up coming back down and then closing, let's say, around 1270 or 1275 or something like that. But once again, I don't see the catalyst for a euro positive thing other than they're just going to try and blast some stops. But I mean, we have a lot of activity down here. Obviously, if they would get up here, they think, okay, we have that bottom in place. But I don't know. With these equities, the equities pull back, then that euro is going to slide right back down the tubes. Well, we're trying to push up a little bit here. Now we can get a little bit of movement here today with the euro. And That's going to be up here in 86.60 right there. Well, actually, a little bit nudge higher. We'll call it right there. 86.63. Support, well, if we did slide back down, initially, let's go right there. Support is 85.85. Obviously, we've got to give some room here. Well, this has held the market in check rather well here. Until proven wrong, it isn't wrong yet. And it's going to be that 25.60. Actually, we gave it a little bit of extra room. Okay, yesterday we thought when we were up in here, we thought we might be able to blast those stops. Well, they didn't blast those stops. Yeah, we'll go with this 20. We'll keep that 25.77 from yesterday because we do have that volatility. Don't really see it, but we'll see what happens. Support is going to be right there, 24.92. We got to allow for this volatility. Let's take a look at the euro on. Clears the bell right now, 57.40. 38 is just fine by me. If we take off, the euro going a little bit nuts. So probably have a tough time as well as the Aussies holding up. But it would come in right there at 58.14. Boy, this market's quiet. Well, right here, 67.41. And we'll go with that 66.48. We'll keep that in check. Right there. Pretty good run up in here. Look at that. This is a nice, impressive rebound here in the Aussie yen. I posted this chart yesterday when we were right there We're just barely hanging on the trend line. Then we broke them. We eventually broke them. Took this dip here. We had 79.08. Okay, there was our 8, and we found the support just a little bit below. And look at this smart rebound here. We're gonna go keep this 79.74 there, and we're gonna keep the 79.07. We can keep them both there. That worked out very well here. This support held up okay overall. We came on it. I remember posting this here in the chat room because we just come into that 45.03. We dipped a little bit below, but we've jumped back above it. For right now, there's your scalp wise. There's your resistance there. Tricky stuff with all the issues with the pound. For now, we're going to stay with it. We're going to go with this, which was support before. 45.36. They've gotten above it, but we're going to go with 45.36. As I mentioned, on the bias charts, it's all scalps. Scalp is very short-term trading for that, and then over through the next 24 hours. So that's what we're seeing. Doesn't mean something on a bigger term, bigger outlook we're not seeing, but for right now, that's what we focused on. Support, well, we'll see what the market does, but I think the market would find support there at 45.03 again. Well, it only held for a little bit, but it would be important on the way back down. Resistance on a short-term basis. We already came into that area, a rebound, and then we turned around and fell right back down. You can see that coming right in here across these touches, and then that's where the market came back to, went just a little bit above it and slipped back down. No good take on this at all. I don't see that we'd come right back and turn around and rotate right back again. If we just go right here, that seems a little bit far, but that's it. Be 84. That may be way out, but I just don't see the market. I mean, this played in perfect where it dips. We come right back, and you can see where the volume is right there. Okay, 83.44. We got up as high as what? 83.50. Looks like about 55, and we dip back down. I don't see we come back down. We come right back down again. So if they're going to challenge it, they'd come up to 84. So that's what we're going to go with. Seems a long ways off, but that's what we'll have to go with. Support 82.31. So it's going to be a big old wide range. You can see here the 82.31 is at 38% as well as 127% of that extension. That was a nice rebound back right there where the volume is. You can see that. And then we dip right back as last set. That was a nice little return back. This market is pretty much quiet. No movement. Resistance is going to be right up here. 94.65. Too much building around here to keep it any lower. Really going to have to open the door and allow that to move higher. And on the support side right there, 92.73. It's interesting. Look how they're trying to pull us back. They're probably just dancing around in between these levels. Look at the euro. But one thing would also be is if they try and ahead of the ECB, they may try and goose the stops a little bit. I don't think they're going to take off, but I think that there's a possibility we can goose these stops here. So let's see what we'd be looking at. I think that's a potential right there. They try and goose some stops. People that might not want to, might be have the stops too close. Here's that 1291-ish, actually 93. Where could they push these stops at on the initial run here? As they spook them ahead of the ECB. Right there, 1303. If they could push it up. 1303. Here's the bias chart. We're all set, and good luck here on ECB day. I'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.